everyone. I'm pleased today to welcome Quebec Finance Minister Girard. Quebec, as we know, paid a heavy price to the pandemic. It had to take some drastic measures over the past year and a half to protect its population. And from a financial standpoint, that also meant giving up the balanced book that it had really worked hard to obtain in order to spend on healthcare and other things. And now as the economy recovers, it's also facing some of its old problems, like a labor shortage. At the same time, there's some good news. Hydro-Quebec just signed a 25-year contract with the state of New York to supply electricity. And we just got the GDP numbers for the second quarter, and Quebec is actually doing much better than Canada as a whole. Maybe we could start there, Minister. What happened in Quebec in the second quarter that it went in a different direction from the rest of Canada? Is it not hit by the same global supply chain problems?
Well, I think the story there, first of all, I would like to say that it's a pleasure to be at the conference again this year. We had forest fires in BC, and there was some issues with auto production in Ontario, and Quebec was just with what's going on with the ongoing recovery, with strong consumption, decent export volumes, the residential market was strong. So overall, Quebec is bouncing stronger than we had expected in the last budget. And the events that made Canada overall have negative growth in the second quarter, I would consider them temporary in nature.
So there's nothing in Quebec that is, you would say, different from, or that stands out?
Well, what stands out is that we have overall strength in all components of GDP. Obviously, government spending is doing well, but consumption, private investment, exports, residential investments, all components are powering along, and of course all this is contingent on the health situation improving, and the vaccination rates are fairly high. We've kept a lot of our healthcare measure or public health measures in order to prevent new cases, and this is really a precondition to economic growth, and so far it's working well.
Quebec was the first province to adopt a vaccination passport, and that got into force recently in September. Is there any effect on the economy from that? Do you feel like fewer people are going to restaurants? Do you expect to see any hit from that?
Well, it was fairly smooth. We gave a transition period, and it is for non-essential services, so like restaurant, bars, gyms, and people like to know that they're safe when they eat indoors, and overall, I think the benefit outweighed the additional measures, and overall it's well accepted. I think with all new measure, the transition period was helpful.
So from a growth forecast perspective, are you still sticking to the 4.2% you had in the March budget, or are you getting more optimistic with the first two quarters?
Well, we will release new economic projection when we give the fall economic update. But when we provided the 4.2% in March, we were below the private economic forecaster, which close to 5%, and I would say that most of them have revised their forecast since then. So overall, I have to say that things are looking better than we had forecasted in the budget. So more growth, more revenues, better fiscal position. But we will give precise number in the fall update. But the numbers like the one we just had just confirm that overall Quebec is doing fairly well and better than what were conservative assumption at the budget.
And you did mention public spending as part of the reason why the economy is doing well. I mean, to what extent is the help from Ottawa and from Quebec propping up the economy? And is Quebec ready to stand on its 2 feet without such help to businesses, as they're supposed to wane at some point?
Well, I think that what we saw is that for the first time in a recession, we saw disposable income going up. And a lot of that is related to the federal government programs and the Quebec government programs. So we provided support to our citizens, to our businesses, and that has been helpful. But we're now more than 18 months into the pandemics, and these programs needs to stop, and we are transitioning to what is the recovery period. So overall, what we're seeing in the private sector is that most of these programs are not necessary anymore.
And that's what I was going to ask you about, of course, labor shortage. I mean, first of all, I'd like your assessment of how worried you are, because I was looking at numbers in terms of vacancies in the second quarter. Quebec had the biggest rise in job vacancies. So, and it's not the most populous province in Canada. So, I mean, how high is that on your agenda of on your concerns?
Well, it's first of all, these numbers are important, and what the situation that we have now is a first, is that we have job openings at the same time that we have people unemployed, and a lot of both. So we still have 100,000 people that were working in February prior to the crisis that are not working now. So these 100,000 people are available, but they need to be retrained. They need to feel secure to go back to work. Perhaps they need daycare. Perhaps they need training. So there's a transition. Jobs opening, unemployed people, and at the same time, we have labor pools that are underutilized. Like people tend to retire a little earlier in Quebec than in other provinces. We also have people under 30 years old that are neither studying nor working nor training. So there's another pool. Immigration was almost at a standstill in 2020. We're resuming immigration and welcoming new citizen, but also people in the labor force. So overall, we have lots of pool of people that are and will be available to fill these vacancies. But it's normal that coming out of the pandemic or the recession, there is this mismatch between jobs opening and people available to fill these jobs.
Before the pandemic and the budget in 2020, one of your measures was to bring more elder people in the workforce. You had compared the numbers with Ontario, and that was one of the things you were trying to achieve. Did you manage to do that, or did the pandemic sort of push back that issue to later, and it's something you're trying to address now?
No, what we're seeing is that these measures are working. Could there be more measures, or could they be working more? Yes. But these measures are effective. We estimate that if we had the same participation rate in Ontario for 55 and over, we would have more than 90,000 people available. 90,000 more people available in the workforce. So what we're seeing is that these participation rates are increasing over time with the evolution of the workforce, less manual, more office type job. So there's a long-term trend improvement, but we're bringing fiscal incentive in order to stimulate that and accelerate that.
So you even during the pandemic, some older people came back to work.
Yes.
Interesting. So you mentioned one part of the strength of the Quebec economy was residential housing. It's a growing share of GDP. And we know, like, I think everyone who's watching this is keeping a keen eye on the housing sector in Canada. There's always this fear of a crisis. Are you sort of it doesn't feel and hasn't felt that your government is overly worried about housing at the moment. Would you say that's still a fair characterization?
I think what we do is we want to make sure before we intervene in private markets that our intervention are going to be doing more goods than harm. So we've launched a consultation process on the role of brokers, real estate, residential brokers, in order to make sure that we protect the buyers in the market. So we want to make sure that people do proceed with the inspection when they buy a house. We want to make sure that residential real estate brokers are their conduct is respecting their code of conduct. That and we're looking at what is a feature of the Canadian market that could be suboptimal, even though it's not. We're not sure what the better system would be, but I'm talking about blind auctions. So blind auctions in a fraudy market are bringing situation where people are afraid of losing the properties that they want to buy for a legitimate reason, and it's bringing upward pressure in the market, and it's reducing affordability, and so we're looking at that carefully. But we need to be sure that what we will bring in replacement will be better than what we have now.
And at the same time, you have to deal with federal decisions. I mean, we saw Prime Minister Trudeau making campaign promises. We don't know what, if he's going to act on it, but to make housing and access to property, easier for young people. And, if there's more aid to do that, are you worried it's just going to end up pushing up prices? I think a lot of economists have that concern.
Well, as you know, provincial finance minister don't like to intervene in the federal politics, but I would say that the demand is really strong. So any measure that would boost demand, I think I would question and would want to analyze a lot before being implemented. We need more supply, and we need to provide opportunities for builders to bring affordable housing to the market. I'll have these discussion with the minister Freeland if she's appointed again, and I was working well with her. I would be happy to work with her again. But I think boosting demand would not be my favorite course of action.
Understood. So a little word maybe on the deficit, right? So your number for last fiscal year ended up being much better than you had first anticipated. And the first 2 months of this fiscal year have also been pretty good. So are we just headed to, first of all, a smaller deficit than planned this year, and then maybe a shorter time to bring the book back in balance?
Okay, so what's happening, and we saw that, so we had forecasted $15 billion deficit for last year. We revised to 10. You're right that we're starting the year on a better footing. So what's happening is that growth is better. And because growth is better, we have more revenues. But also we have more expenses because we have a fourth wave, and we did not expect a fourth wave. And yesterday we had to bring measures to try to induce people to work, nurses to work full-time in the healthcare system. So we have more growth, more revenues, more expense. And we will provide the full update again in the fall economic update. But the Quebec situation is not entirely different than the other provinces. We saw that BC revised their 2021-2022 deficit projection significantly, and I'm expecting overall, everything else equal, all jurisdiction to do better than what was forecasted in last March.
And does that also, are you still viewing, the return to balanced book to take 7 years? Because it used to be 5, I think, then it was moved to 7.
Yeah, well, we will update all that, but there's no reason to change that. We had given some some benchmark on what we wanted to do. First, we want to fight the pandemic, and we're still in a pandemic, so we want to we want to transition out of this. Second, we want to reach full employment, and again, there the employment numbers are better than forecasted. Then we want to reach full capacity, and then fiscal balance. So we're working on all these things to the extent that the numbers are better. It could take less time, but again, it's early to assess that because we're still in the fourth wave. Yes, we have more growth, more revenues, but unfortunately, we also have more expenses.
And of course, I want to remind our listeners that in Quebec, when we mention deficit numbers, it's always after contribution to the Generations Fund, which is really a Quebec unique thing. There's been some reflection on the funds, on what to do with it, and where are you? Where do you stand on that?
Well, I think it's very important that and your viewers are they're insiders, they're knowledgeable. When we speak of public finance, we're talking in terms of OPEX, revenues minus expenses, but we have a lot of CapEx. We have an infrastructure plan that is for 135 billion over 10 years, and therefore, when we're in fiscal balance from an OPEX point of view, we still have CapEx that are increasing our debt, and the Generation Fund is used to reduce the debt, and the money that we're contributing in the Generation Fund are going against our CapEx expense, and therefore are very helpful in order to prevent our debt level to increase. And so we want to keep that.
So so we don't expect major changes then?
No.
And maybe we just have a little time left. Is there any, what have you learned from your green bond borrowing plans? I mean, I think they've worked pretty well in terms of borrowing costs. Can we expect to see more of it, a different program, ESG, or just to increase their share compared with the other sorts of borrowings?
Well, I think we can say that for the first time this year, we issued slightly below conventional, and that was a very interesting development. So hopefully that's a lead on where all the green premiums will be going in the economy. And so we... The Quebec government wants to do the transition toward a green economy, and we all need to do this. And this will take time. This may reduce growth and raise prices a bit, but it does provide for a lot of economic opportunities. And it's our role with the private sector to make this transition as best as possible.